Hey guys, in this video, we're going to talk about the term fading and exactly what that means when we're applying it to the stock market and trading. So you might have heard that term before. Oh, they're fading it at the end of the day. Oh, I'm going to fade this. So what does that actually mean to fade something, and what actually are these people doing when they are doing that? Well, simply put, all fading is just a contrarian move to a recent the recent trend. Okay, so for example, here on USFD on the daily chart, you can see that our last trading session had a nice move here midday. So from right around 12:30, basically 11:30, 11 to about 12:30, had a nice little pop in here in USFD. Now, what happened was after this, everybody started taking their gains. They realized, okay, we had a nice swing in here. Let's not get crazy. So they started to fade it out. So they started to sell this thing off. And that would just be fading it. So you had a recent move in here, a recent confirmed, okay, uptrend right here. And then everybody just faded it. So that just means that they kind of sold off. It was contrary to this previous move. And they just technically, so you actually can look at this chart and say, oh yeah, they faded it here into close. So that's all that really means. It's just more of a contrarian way to view the markets. You can also fade. A lot of times, everybody fades earnings reports. It's kind of like, think of it as they're pricing in the news of something already, of an earnings report, of let's just say jobs report, any sort of report coming out that is scheduled. You know what I mean? Fed speaking. A lot of times you have the market makers and the buyers in here, they start pricing that in because they know as soon as that report comes out, either good or bad, a lot of people will start fading that because the news already happened. All right. So, and that's also where you get a lot of volatility contraction when you do get that fade off of those reports. But if you're just fading just normally without a big report, volatility will usually increase. But you get the big contractions when those reports and the news actually does come out, and then everybody fades it off of that. So fading, all it is, you're just kind of contrary to that recent upward move, and more or less you're just trying to sell the stock off, and then slowly buy it back up at a cheaper price after that news event or recent move already happened. So there it is, fading. All right, guys, thanks for watching. Make sure to check us out on our social media. We have attached the links to our socials in the description. And we also have a trading service if you're interested. There's more information in the description below.